Second system is the estimated profit. Well, before talking specifically about the estimated profit model, as I explained before, if a company is not allowed to use the simple system, it can choose between the real profit and the estimated profit. How to choose? There are some taxes that are impacted by the chosen systems and the others that are not. So the taxes that are not impacted, I will talk about them in the second model. Now I will only explain about the taxes that are impacted that are different in these two systems. So I divided the taxes into two groups only for purposes of explaining. These names doesn't exist in the real life in Brazil, but to make it easier to explain, I divided them. So the group 1 I call the social program taxes, and the group 2 is the income tax and social contribution tax. Well, now talking specifically about the estimated profit system. Before explaining exactly the estimated profit system, I have to explain a concept. That's probably known of many people because these systems are also exists in other countries. That's the difference of cumulative and non-cumulative tax system. The non-cumulative is, for instance, if a company has a final product, it pays some A taxes. Then for the raw materials, it has already paid the same A taxes and it can deduct. So the company will pay only for the net amount of this profit. So this is the non-cumulative model. The cumulative is the company pays the taxes and for the final good, and will also pay the same tax for the raw materials. So going back to the estimated profit model, the group 1 taxes are applied over revenues and it's calculated based on the cumulative system. This is the calculation base is the total revenue, and it's not possible to deduct any other taxes previously paid. So for example, if you have 1 million revenue in a services company, then this group 1 taxes will be 30.65%, and you will apply it directly. So the amount you will have to pay for group 1 taxes will be $36,500. For the group 2, the calculation is a little bit different. It has one more step than the group 1 calculation. So first step is to calculate the calculation base. So the group 2 taxes, the calculation base is a fixed percentage over revenue. For instance, for trade activities, the calculation base is 8%, and for services, the calculation base is 32%. In summary, this means that the government understands that if you are a trade company, you will have 8% of profit. And for services, the profit will be around 32%. This is the reason why they have these percentages that is used to apply to a calculation base. So then, after having this calculation base, you will have the tax percentages that will be applied to it. And it also varies according to the level of revenue. For example, for the same example of the services company that has $1 million of revenue, the calculation base will be 32%. This means the calculation base will be $320,000. The taxes rates to be applied are 34%. And then you end up with $108,800 to be paid in the end. So, in summary, in this example of the services company that has a revenue of $1 million, the Group 1 taxes will be $36,000, the Group 2 taxes will be $108,000, and I also included $300,000 as costs and $250,000 as expenses to show that this company will have around $304,000 as profit. So in the end, the Group 1 and 2 group of taxes will represent around 14.5% of the revenue. Well, it's important to remember that these are not all the taxes that has to be paid. I will explain the other taxes in the second model. And if another detail that needs to be mentioned is that if the company reaches the $24 million of revenue, then it's the company is obliged to change from the estimated profit to the real profit model.